Thanks, Chris. And for further breakdown, we're joined by our regular money man, Scott Phillips, Chief Investment Officer at Motley. Scott, good evening to you. The global market is seeming to have settled from some of its jitters.
Tomo, I think that's pretty right. And as Chris mentioned, the ASX making back pretty much the entire loss from Monday's 2% fall. It's amazing what a difference a few days can make.
Scott, let's start with the fears around the default of Chinese property developer Evergrande.
Yeah, the good news here, and as you mentioned, the jitters are going away because they've done a deal, which means they should be able to meet their repayments as and when they're due. This may yet be still kicking the can down the road, so we're not going to say the coast is clear just yet, but it certainly means this week is not likely to be a problem for Evergrande and for the world's credit markets as well.
OK, now in the US, the Fed chair has flagged reining in pandemic stimulus and potential rate hikes.
And this is part of what's really seen the market recover nicely. Now, it wasn't that long ago, the old taper tantrum that we called it, when the Fed talked about reducing some of their stimulus, the market went absolutely nuts, fell meaningfully over the last the 3 or 4 days following that announcement. This time around, the markets received the news with really positive intent. And as you say, the good news is the Fed basically saying that we don't need this support anymore. These are still essentially emergency measures, emergency levels. When they're winding those back, it says the Fed's confident the US economy and therefore the world economy is well and truly on the road to recovery.
Back home, it was dividend day for many investors.
It was not only dividend day, but dividend week. It's a really big $15 billion worth of cash is going to find its way to shareholders' bank accounts this week. Another $13 billion next week. A total of around $40 billion this dividend season. There is so much cash coming. And for many investors too, it's about time, because this time last year, particularly the banks, went very, very light on those dividends as they worried about what the recovery might look like. So plenty of happy investors this week.
40 billion is huge. We'll wake up to some significant manufacturing data from around the world.
Yeah, mostly again out of the US in particular here. Both the Kansas Fed and the market PMI, the Purchasing Managers Index numbers, are out overnight our time. The good news we're hoping for is a slight improvement in manufacturing there. And of course, Chinese manufacturing still remains a very key metric. We know they're the world's factory, the world's warehouse, and frankly, the world's engine room in terms of economic growth. So I'm hoping that's also a positive set of numbers.
And Scott, how's Wall Street looking?
More good news, Tomo. This is a good news bulletin tonight, which is lovely. At the moment, US futures up just over 0.5%. We might even finish this week in positive territory, despite how we started.
So much good news. Scott Phillips, thank you.